Here we go. Oh, look. I got a haircut, by the way. Do you see
You look good.
I
I haven't had hair since 2005. I've been bald. I think I started balding when I was in high school.
I'm the only male in my family that still has hair.
I'm the only man that's bald.
Oh, that sucks. Well, does it suck? Do you care? I
No, it's easy.
you don't have to get haircuts.
I don't have to get haircuts. I don't. Yeah, I think it's easier.
All right. Good morning, everybody. This is going to be an interesting video. Hopefully it's not too long, but we've been getting a whole bunch of phone calls because of the stock market freaking out. What are interest rates doing? Why is it doing what it's doing? And I think that's a really relevant topic that Zac can answer a lot of questions on. You know, we got stock market down, T-bills, T-bonds, usually people pull money out of one place, they put it in another, and right now that's not really happening.
Well, I mean, even on the Market Watch, the little green bulletin line up there just hit. And this week for the Dow would be the 5th worst in 124-year history.
Well, but you got to qualify that. Like in Black Monday, okay, so it fell 10% this week.
Yeah.
Okay, so in points, it's the biggest drop. But it fell 10% this week. In one day in 89, 87, it fell 22%.
Yeah.
So it depends on what statistic you look at. You can say the sky is falling, or you can say, hey, we've been through a lot worse than this and been just fine.
Yeah. And overall, our economy is still amazing.
Oh, yeah.
I mean, this has been a rough week for stocks. They got beat up, and which is good for interest rates. Stock market goes down, interest rates go down. Mm-hmm. But as a whole, I mean, it's not like we're going to fall into a depression or, I mean, there's a recession or anything like that. It was just a tough week.
Well, and that's the conversation to be had, right? Everybody's talking about we're all going to die. We're all going to die. That's what people think.
Right. Coronavirus is going to wipe out 1/3 of the population,
and it's not. See, here's the other thing. I was telling you, I like to read Al Jazeera. It's a good news source. It's not biased. It's out of this country. There's 80,000 cases reported of this virus, and people are having a fit. But what they're not reporting, that Al Jazeera was reporting, this is where I got my numbers from, over 40,000 of these people have already recovered.
Yeah.
They're not showing symptoms anymore. They're getting past this. It's not, the Black Plague from the Middle Ages.
No, more people will die from the flu this year than coronavirus.
Right.
Or pneumonia, or probably something like that. So I mean, that's
car accidents.
Yeah.
What I think is really happening in the stock market, now this is me, but a lot of these factories in China were shut down. Okay, so there's a lot of people that don't have anything to ship, they don't have anything to truck, they don't have anything to sell, they don't have the pieces, parts, and ingredients they need for their other plants in other countries. That's why there's going to be a ripple effect. That's why the stock market's feeling hammered, is that investors are scared that the profits are going to take a hit, and they probably will. So that's legit.
Yeah.
And that's why we're seeing what we're seeing. But as these factories come back online, I'll bet you a nickel right now, it's going to recover. Pharmaceuticals, I was telling you, part of that same article said that 20% of all the ingredients that go into medicine come out of China. The fillers in the pills, the basic preservatives, a lot of this stuff, those factories were shut down because medicine is so touchy. They didn't want workers with viruses.
Yeah.
So there isn't any of that. Countries like India, I think the same article said that 40% of the medicines in the United States are manufactured in India. The pharmaceutical industries are German. You got Merck, you got Bayer, you've got...
Well, and Big Pharma pushes everything.
So now without those ingredients, now the next ripple effect is going to be these factories in India are going to be affected. Then eventually... So this is, in my opinion, what's happening.
And it will correct itself.
It will. It will. And here's another bit of context. Our stock market now, after this catastrophic week, is right about where it was in December.
Correct.
And the sky wasn't falling in December.
No, it was not. And for 2 weeks now, I've said there's no way rates can get lower. And
now they're getting lower.
And it keeps getting lower.
So this is Zac's...
But...
Oh, by the way, just in case you don't know, this is Zac Valerio at Fairway Mortgage.
Fairway Mortgage. And, I know how to read this T-chart.
And I'm Vince Davis from Conway
Real Estate. And Fairway, I hype it up all the time, but for reasons like this. So every morning we get a report at about 7 a.m. that talks about, where the market's at. And it's just full of a bunch of different types of things and information. But one of the things they were talking about is when rates do this, when they really plummet, at some point we're going to see a sharp correction too. So just as fast as they came down, they'll go up just as fast again. And it's not going to be up like, interest rates are going to be 7% in 3 weeks. This T-note, it takes time to really see an adjustment. It really has to kind of elevate or decline. But
yeah, since the last time we shot a video, it's the change. And we're watching the ticker, if you guys are wondering why we keep looking in this direction.
I watch the ticker all day long. It's like watching horse races. But
it's really, 0.6, 0.7 off from where it was 2 weeks ago. So it's falling, but it's not like catastrophic.
Yeah, where we're at now, the range we're at today, it wouldn't be surprising if this was the lowest we've ever been. Which, if you own a home, or if you're thinking about buying a home, that was a good segue.
There you
go. Last year when I was doing refinances, I made a bunch of videos. I said, if your rate was over 5, call me and we could probably save you money. The rates are so good right now. Now it's, if your rate's over 4, we can probably save you money, which is just unheard of, right?
Even if you're self-employed right now, you're able to do stuff.
Yeah, there's so many options out there, and one of my favorite things to do with people when rates are this good is constantly we think about how much money can we save you?
Mm-hmm.
How much money can we save you monthly? I had a really cool young couple. They're 25, and we're going to move them from a 30 to a 20, and they're going to save $30 a month.
Really?
Yeah.
See, that's awesome.
So
that's wealth building.
Yeah, and in people's minds, like, oh, $30. Why would you refinance your house for $30?
But they're going to own it 10 years sooner.
They just bought the house last summer. They just knocked 9 years off of their loan term, which is 1/3 of the interest they'll pay over the life of the loan. I have another friend coming in today. She's going to bring me her paperwork. She had a couple of really high interest credit cards. We knocked the interest cards off, paid off all those, and then she took some cash out to do some stuff around her house, and her payment didn't change. So she took cash out to pay off X amount of dollars in credit cards, saving her $340 a month.
On credit card debt.
On credit card debt. Plus she's going to redo her kitchen, which will just raise the value in her home even more, and her payment didn't change.
See, that's where.
So it doesn't always have to be how much money can I save monthly. There's so many options with refinances, and a lot of people think it's bad to do. Well, I don't want to refinance because
I don't want to reset my loan.
I don't want to start the clock all over and do all stuff. Well, if you're not 50 and you're staying in the home for longer than a year, 2 years or 3 years, it's your biggest leverage. It's your biggest bargaining chip. So take advantage of how fast we've grown equity in this county and this state, and put yourself in a position to have some financial freedom for the next 10, 20 years, because that's what you can do with these refinances.
But here's the question of the hour, man. This is what I really wanted to talk about, is why, so interest rates are not actually based on the stock market, right? A lot of people get the impression that the Fed sets the interest rates, and every time the Fed adjusts interest rates, the mortgage rates change as well. And then, so then there's the Fed that does it. And then a lot of other people think that the interest rates are pegged to T-bills, T-bonds, Treasury instruments. And classic mentality is that when the stock market goes down, the Treasury notes go up, right? And right now they're both going down. Is that true, or is that... Because that's what I'm being asked, and those are questions I can't ask because I'm not a loan officer.
I don't have an MBA. I don't have a finance degree.
But you're a good loan officer.
My degree is in healthcare management.
That's why you look so healthy.
Yeah. Which just really helps in this career, my healthcare management degree. I just keep it really simple because Barry Habib looks at 3 and 30-year Treasury notes. Mm-hmm. Other people look at 1-year Treasury notes. There's so many different ways to look at it. So I just keep things kind of stupid simple for me personally. And when I talk to people, because you could go into a 2-hour conversation with someone who's really good at numbers and really into the stock market, and they can explain it better. I kind of keep it at 3 things. bad news is good news for interest rates. So it's sad, but when something tragic like the coronavirus happens, interest rates drop on homes. When the stock market goes down, interest rates go down. And then when the stock market surges, interest rates kind of go along with it. So they're parallel, right? Mm-hmm. Either way. Like I said, there's a couple different ways you can explain why it happens and how they tie together. But based on social media and how things go, the last thing I want to do is say something on camera and then
it's going to be around forever.
Yeah, and then get attacked for the way I described it or I didn't do it correctly. So like I said, I just kind of keep it to those three things. Bad news is good news for interest rates. When stocks go down, interest rates go down. When the stock surges, interest rates go up.
Okay.
That's just kind of, I just try to keep it as simple as possible.
So, but that's a good answer. And, neither of us have crystal balls.
No.
I think we both believe that this is going to be another bump in the road. I think that now's a really, really good time to get a loan application in if you have any interest. I know a lot of my clients right now are stumped because they're like, well, if I sell my house, where am I going to go? It's hard to find a house because everything's so down.
Because inventory's so tight.
But I'll tell you something. If you get a loan, if you get a killer loan, I'll find you property. I'll door knock houses that are not for sale if I have to. If you have any inkling or any desire to take advantage of this, we can make it happen.
Well, another thing too, because interest rates are so low, it now opens up more room for your purchase price as well. Mm-hmm. So if you were on a search from Vince and your max purchase price was, let's just say $250, and that was because your interest rate was at 4%, and now it's in the low threes. Now your buying power is up to $280.
See, and that makes a big difference.
Which opens up, I know firsthand, I know you do too, the second you go from, let's say your purchase price is $249,900 and you go to $265,
it opens
how many more homes pop up? Probably 20 or 30.
Oh yeah.
So it gives you so many more options too, and your payment is going to be lower than what you were looking at $250 because the rates are so good. So what I want to get people to understand is like that information's free.
There you go.
Let's have a 15-minute conversation about what your credit looks like, what your debts look like, and we'll put together a plan, and then you can really decide if you want to do it or not.
Right. Information's key. If you know, and that's the other thing that drives me crazy is when people call me up and they're like, I know how much I can afford. I don't need to talk to a loan officer. Well, really? Mm-hmm. No, you can't. I had an appointment for later today that canceled because the people were way off base on what they thought they could do.
Yeah, and it happens a lot. They call it Quicken Loans or someone like that.
Rocket Mortgage.
Yeah, and they say I make $90,000. Someone says I make $90,000 a year and my debts are $500. A lot of times when I talk to people, they actually make more than what they think.
Yeah,
it happens all the time.
A lot of people are better off than they think. That's also.
I only make $50,000 a year. I get paid, $2,200 every 2 weeks. Well, do you get paid semi-monthly or do you get paid bi-weekly? If you get paid bi-weekly, you make more money than you think.
There you go.
Or my salary is 48, and then we look at their pay stubs. Your salary is 52. It's over the course of the year. It doesn't look like your pay stubs are much higher, but in the grand scheme of things, that's a lot for us. A couple $100 can really move the needle.
So, without sounding like broken records, you need to call us.
Please do. Yeah. And I've been working in the office all day. I work at night. I'll be here this weekend. We don't know how big this window is going to be. And Vince knows better than anybody. I'm like the biggest Debbie Downer, and sometimes I think too negatively, but I just think worst case scenario all the time. Take advantage of this weekend because we don't know what it's going to be on Monday, and I'm sure it'll be exactly the same, but let's figure it out now and get you out now because now is always the best time.
Yeah, no, and that's no joke. I'm going to do an annual letter to my past clients and stuff, and a year ago we were telling everybody that we were in the best market we possibly could be, and it's just keeps
Yeah, I mean,
surprising us.
the proof's in the pudding. It's even better now.
Everything's always a surprise, it seems like.
Ooh, look at that.
No crystal balls.
Jeez.
Shut off, dude.
Just poked out. Who doesn't have nautical stars? Goodness gracious. Good Lord.
Well, look at you guys. It's a 15-minute video. I want to thank you for watching yet again.
Hopefully they watch all of it.
Yeah, and you know what? Even if you don't, we put these on YouTube. They're on Facebook. You can always go back and look at them again. Sometimes they're a little dry, and some people are like, "Oh no, we're not going to watch something that long." Your clients don't care about stuff; they want to know about you. You know what? If you're serious about buying a house, watch these things because we do have a lot of.
And 15 minutes isn't that long for something that's a life-changing decision.
Bingo.
It's just not.
Boom.
Boom. Full of good one-liners today.
Yes.
Got some sleep last night. Makes a difference.
So Zach Valerio, Fairway Mortgage.
Vince Davis with Conway Real Estate.
And thank you for watching.
Yeah, have a good weekend, everybody.
Bye.